Imagine a man sitting on a luxury yacht in the middle of the ocean. On paper, he is worth $50 million. He has the expensive watch, the designer suit, and a portfolio filled with impressive office buildings in the heart of the city. But suddenly, his phone rings. It is a margin call from his bank. They demand $5 million in cash by the end of the business day. And here is the terrifying part. Despite his $50 million net worth, he does not have the cash. He cannot sell a building in 4 hours. He cannot buy a loaf of bread with a piece of a skyscraper. In that moment, the millionaire is effectively broke. We have entered a new era in 2026, where the rules of money have been completely rewritten. For decades, we were told that debt was a tool for the smart, and that leverage was the path to true wealth. But as we look around today, we are seeing the most successful people of the last decade losing everything. It is a quiet crisis that is happening behind closed doors. If you are approaching retirement or already enjoying your golden years, you might feel like the financial system is rigged against you. You see inflation eating away at your savings, and you hear whispers of a market that feels more like a house of cards. Your modest, debt-free life might actually be the ultimate luxury in this new economy. Today I'm going to show you why the rich are going broke at record rates and how you can protect your peace of mind. If you believe that financial security is more about sleeping well at night than having a flashy car, please hit the like button. It helps this message reach more people who need to hear the truth. And if you want to understand the real world of money that the news stations will not tell you, subscribe to this channel and join our community. Also, leave a comment below saying, "I choose security," if you are ready to put your safety first. Now, let us look back for a moment to understand how we got here. The year 1982 was a turning point for the global economy. Back then, countries like Mexico were booming because of high oil prices. Banks were lining up to lend them billions of dollars because they thought the party would never end. But then, oil prices collapsed and interest rates skyrocketed. Suddenly, those billions in debt became a death sentence for their economy. What happened to those countries in the 80s is exactly what is happening to wealthy individuals in 2026. For the last 15 years, money was practically free. Interest rates were near zero. If you had assets, you could borrow against them for almost nothing. So the wealthy borrowed millions to buy more real estate, more stocks, and more toys. They assumed that their assets would always go up in value and that debt would always stay cheap. They were wrong. The Federal Reserve changed the game. Rates went from near zero to over 5% in a very short amount of time. This was the fastest increase we have seen in 40 years. Suddenly, the interest payments on those millions of dollars in debt quadrupled. At the same time, the value of the collateral started to fall. This is the nightmare scenario known as a margin call. When the bank sees that your collateral is worth less than the loan, they demand cash immediately. If you do not have the cash, they sell your assets at the worst possible price. According to recent data from 2026, the number of high net worth individuals experiencing a liquidity crisis has jumped by more than 30%. These are people worth tens of millions who cannot find $500,000 in cash without taking a massive loss. In this high interest rate environment, the word illiquid is just a fancy way of saying broke. But why should this matter to you? It matters because this crisis is creating a massive wave that will affect every corner of the economy. Specifically, we need to talk about the $2 trillion bomb sitting in the commercial real estate market. Think about the office buildings in your local city. Many of them are half empty because the world has moved toward remote work. Owners of these buildings borrowed billions when rates were at 2%. Now, those loans are coming due, and they have to refinance at 7 or 8%. The math simply does not work anymore. The rent coming in cannot cover the new mortgage payments. Property values have dropped by an average of 35% since their peak. This means that many owners now owe more to the bank than the building is worth. This is a ghost building crisis. And because banks do not want to own empty offices, they are stuck in a zombie state. For you, as someone focused on a secure retirement, this is a clear warning sign. It tells us that the era of borrowing your way to wealth is officially over. The people who will survive 2026 and beyond are the ones who understand the difference between paper wealth and real wealth. Paper wealth is what the bank tells you that you are worth. Real wealth is your actual cash flow and your ability to cover your expenses without stress. I want you to think about a man we will call Richard. Richard spent 30 years building a portfolio of small apartment buildings. By 2019, he was worth $10 million on paper. He felt invincible. He took out a large loan against his buildings to buy a vacation home and a luxury boat. He thought the rent would always cover the payments. But when he was suddenly losing $20,000 every single month. He tried to sell one of his buildings, but there were no buyers. The bank eventually foreclosed on his properties. Richard went from a $10 million net worth to having almost nothing left in his bank account. This happened because Richard confused access to credit with actual ownership. He did not truly own those buildings. The bank owned them, and he was just managing the debt for them. If you have a paid-off home and a modest savings account, you are actually in a much stronger position than Richard ever was. You have liquidity. Liquidity is the ability to access cash instantly without losing value. In a crisis, cash is not just king. Cash is a life raft. So, how do you protect yourself in this environment? First, you must understand that leverage is a dangerous tool, not a lifestyle. If you are still carrying debt into your retirement years, now is the time to be very careful. Check the interest rates on your loans. If they are adjustable, they could become a trap very quickly. Second, you need to perform a financial stress test on your own life. Ask yourself 3 hard questions. If your income dropped by half tomorrow, how many months could you survive? If the value of your home dropped by 30%, would it change your ability to live your life? And finally, do you have enough actual cash in a simple savings account to cover 12 months of expenses? If the answer to these questions makes you nervous, it is a sign that you need to simplify. Many people spend their lives trying to look successful rather than actually being successful. They buy the new car every 3 years. They renovate the kitchen when the old one was perfectly fine. They take expensive vacations that they cannot truly afford. This is what we call lifestyle creep. It is a silent thief that steals your future freedom for a temporary thrill today. In 2026, the most successful people are the ones who are living quiet lives. They drive older cars that are paid for. They live in homes that are comfortable but not excessive. And most importantly, they have a large cushion of cash. They are the ones who will be able to buy assets at a massive discount when the over-leveraged players get wiped out. This is the greatest wealth transfer mechanism in history. It happens every cycle, and we are in the middle of a big one right now. The people who have cash will be able to buy real estate and stocks at 20 or 30 cents on the dollar. To be one of those people, you must have the discipline to stay liquid. Do not be tempted by the flashy investments your friends are talking about. If it sounds too good to be true, it probably involves a lot of hidden debt. Focus on your own household and your own peace of mind. Remember, the goal of retirement is not to see how much money you can pile up. The goal is to have enough to live the life you want without ever having to worry about money again. That is true freedom. Before we move to the final part of our strategy, I want to remind you to engage with this community. If you have found value in this analysis, please like the video and share it with a friend who might be worried about their finances. Your support helps us keep providing these deep dives into the real economy. And if you haven't already, subscribe so you never miss a lesson on protecting your wealth. I would also love to hear your thoughts in the comments. Are you prioritizing cash flow or net worth this year? Let us learn from each other. Now, let us talk about the final 3 steps you should take today. Step 1 is to audit your liquid assets. List every account where you can get cash in 24 hours. If that total is less than 6 months of your expenses, your top priority should be building that fund. Do not worry about the stock market or real estate until your foundation is solid. Step 2 is to avoid bad debt at all costs. Bad debt is anything used to fund a lifestyle or speculate on things you do not control. This includes credit cards, car loans, and margin loans on your investments. If you have these, create a plan to pay them off as fast as possible. Step 3 is to change your mindset about what it means to be rich. Real wealth is quiet. Real wealth is boring. Real wealth is having the ability to say no to things you do not want to do. We are watching the unwinding of a decade of cheap money and excessive debt. The music has stopped, and many people are realizing they do not have a chair to sit on. But you do not have to be one of them. By staying conservative, staying liquid, and focusing on your own path, you can thrive in this environment. The rich are going broke because they forgot about risk. They stopped thinking about what could go wrong and only thought about what could go right. But the market does not care about your plans. It only cares about the math. And the math says that debt eventually has to be paid back. Be the person who owns their life, not the person who is renting a lifestyle from a bank. Thank you for spending this time with me today. Take a deep breath and look at your finances with a calm mind. You have the power to create a secure and peaceful future. I will see you in the next video. Good luck on your journey to true financial freedom.